that the increase that you've seen in the gold price hasn't come from retail buying. The buying has taken place by central banks. And I think that's the key reason why the gold stocks haven't moved. Central banks don't buy gold stocks, they buy gold. If you begin to overlay retail buying on the central bank buying that you've seen over the last 2 years, then I think you see an explosive move in the gold price. And I think at that point in time, it probably carries through to the stocks too. The second comment that I have for you is that the generalist investor still can't spell gold. They don't care.
Hi, welcome to this video. I've got Rick Rule with me once again. Rick, how are you doing?
Mike, things are going very well. The better, of course, for being able to visit with you. Thank you.
Yeah, you're prepping for a conference. You're in Carlsbad right now?
Yes, we have our quarterly boot camp tomorrow. Boot camps are 8 or 8.5 hour long online sessions covering one or another topic in natural resource investing very, very thoroughly, which is like to say 8 hours on one topic. Tomorrow is exploration and prospect generation. The prospect generation companies are a subset of exploration companies that are statistically, pretty obviously, the most likely to make you money of any subset of exploration speculation. So I welcome any of your subscribers who would like to attend the boot camp, although this is on fairly short notice. But anybody who wants to review the material will have the recordings up for a year at the Rule Classroom. For people who are serious mining speculators, these boot camps are absolutely invaluable. An 8 or 8.5 hour long deep dive on a subject. This one will feature as the keynote speaker Dr. Steve Enders, Dean at the Colorado School of Mines, Dean of Exploration, former worldwide head of exploration for Newmont, largest gold mining company in the world. Before that, head of worldwide exploration for Phelps Dodge, largest copper mining company in the world. That keynote speech by itself will be worth the cost of admission. And of course, anybody who pays for any Rule Investment Media educational product that doesn't think that he or she got their money's worth has a gold-plated money-back guarantee. If you pay me the tuition and you didn't think I delivered, just email me. I'll give you the money back.
Yeah, you'll give them the currency back. I don't call it money because it doesn't store value. If it's measured in any fiat currency unit. Anyway, so with gold soaring, I would imagine that the gold and silver soaring, interest should be explosive in this area. Is it, or is it? Because most people, like, I haven't been asked much about gold or silver. I haven't been asked to speak on it. I haven't had a phone call or an interview or anything during this whole breakout. Ronnie Stoffele, the same thing. Everybody that I talk to that's in this sector, this is like the stealth rally. It's invisible to most people. I think it's bizarre.
I have 3 comments to that, Mike. The first is that the increase that you've seen in the gold price hasn't come from retail buying. In fact, if you look statistically at the precious metals ETFs, what you've seen is retail selling in Europe and the United States. The buying has taken place by central banks. And I think that's the key reason why the gold stocks haven't moved. Central banks don't buy gold stocks, they buy gold. If you begin to overlay retail buying on the central bank buying that you've seen over the last 2 years, then I think you see an explosive move in the gold price. And I think at that point in time, it probably carries through to the stocks too. The second comment that I have for you is that the generalist investor still can't spell gold. They don't care. They think that in an inflationary period, that they do better with technology companies that have high operating margins, that the best guard against inflation is a hugely profitable business. There's some truth to that. Buffett did extraordinarily well through the decade of the 70s by focusing on companies that had pricing power. And I don't discourage people from looking at that, but I also do think that people need to pay much more attention to inflation protection that is easy to understand. The difference between gold and say NVIDIA is that it's pretty easy to pronounce and understand gold. And NVIDIA, I just hope I got right. The third comment I would have, however, is that interest in gold among young people and non-traditional people is increasing very rapidly. At my own site, Rule Investment Media, I'm getting an average of 40 new subscribers a day. And they aren't the old, bald, fat, white, God, guns, and gold crowd. The new audience is at least 35% female and more than 50% non-North American. So I think it's important that the gold industry and the gold mining industry begin to address new audiences. I think that's very important. What you'll find is that interest among people under the age of 40 in gold and silver is explosively high, measured by my own database.
Yeah, but still, as a percentage of global investment, it's still way, way down. I was just looking at a chart from Avi Costa that showed it at 1%, where back in the 20s, in the 80s, and there was another bar in there. I can't remember when it was from, but it was up at about 30% was the average when you include the miners and precious metals.
Yeah, I got very different numbers than Tavi's, and they're worse. My numbers are from J.P. Morgan Chase. And J.P. Morgan Chase suggests that the market share of precious metals and precious metals investments in the U.S. market, where J.P. Morgan Chase can track it, is estimated to be below 0.5%, which is to say, suggest that less than 0.5% of all savings and investment assets in the United States are comprised of precious metals and precious metals related investments. What's interesting about their statistics is that they theorize that the 4-decade mean market share was 2%. So if you merely revert to mean, demand for precious metals increases fourfold in the largest savings and investment market in the world. To put that in context, the US market controls between 22 and 23% of savings and investment assets on the globe, including foreign investments in the United States. If you had reversion to mean, you would see a quadrupling in demand in a market that comprises between 22 and 23% of the total market for savings and investment assets on the planet. That's precisely what I think is going to happen, which is one of the reasons why I'm so bullish about gold and silver.
Yeah, well, when you couple that with, it's priced in dollars, and as the dollar price rises, what's going to happen with the second largest economy and the third largest, what's going to happen in China and Europe and Japan and Australia and New Zealand and everywhere else on the planet, as they, measured in all currencies, gold was setting record highs long ago. It wasn't just like a recent phenomenon. When you measure it in the dollar, that's where it was lagging. And with the explosion that is happening right now, and the dollar has been rising though too recently, so that causes it in other currencies to not be quite as spectacular, but it's been spectacular rises all across the planet. And after a while, people are going to really start taking notice. They aren't yet. It is totally bizarre. And I think you're right. It's the central bank buying. It's a lot of Asian buying. And what I see isn't just 4 times more, the current demand to get back to the mean, but there's always an overshoot. And with gold, if there is fear, if there's a currency crisis, the overshoot can be quite dramatic.
I agree with everything that you said. What I would like to do in terms of my discussion about the gold market is keep expectations rational, keep expectations real. Remember that prices are set on the margin. They aren't set through the whole value chain. Four times change in demand, given that not all of the gold that's held is held available for sale, could have dramatic increases in price. JP Morgan Chase also estimates, and they say it's an estimate because they didn't have accurate records then, that in 1980 and 1981, that they believe the market share for precious metals and precious metals related assets in the US market was above 5 and, quote, perhaps substantially above 5%. So if rather than merely returning to mean in the US market, if demand for precious metals, or rather, pardon me, if precious metals market share took out the old nominal highs, then you have a truly goofy number. The truth is, however, that too many gold positive channels try to appeal to people's emotions. They try to give them really wild clickbait headlines. And I don't want to do that. I want my audience to be prepared for simple arithmetic. And the simple arithmetic is dramatic enough.
Yes, it is. I like doing ratios, and Dow gold ratio, for instance. Gold can go up X number of times, or the stock market can come down by X percent, or a combination of the two, which is what it's going to be. Either way, the 1980 ratio will probably be revisiting somewhere near that range, in my opinion. But with all of the underlying fundamentals that we've got going on right now with the economy and with the precious metals, I think it could exceed the 1980 ratios, which means that gold will buy you many times more shares of stock, or many times more real estate than it does currently. That's the dollar. Everybody wants to know the price because everybody thinks in dollars.
Right.
And it's really the wrong way to look at things. What you want to look at is value, not price. How much stuff can you get per ounce? Right?
It's interesting that you say that, Mike. I have some of my money managed by a multifamily office. I wanted to get that money out of my own hands because I don't invest in the broad economy, with the exception of a fairly large shareholding in Berkshire Hathaway. And what I asked this family office to do is prepare an alternative ledger for me, looking at the portfolio in gold terms. In other words, don't denominate it in dollars just for fun. Denominate it in gold. And interestingly, the portfolio manager called me up the other day and said, as a thought exercise, I'm going to introduce this to the other clients of this multifamily office. So through that one little exercise, I've managed to introduce the concept of measurement in gold to well in excess of $12 billion, which was fun.
Wow.
Sort of a guerrilla marketing exercise.
So with all of the geopolitical conflict that we've got going on. Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, goldsilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making goldsilver.com your dealer, and now back to the video. So with all of the geopolitical conflicts that we have going on, we've got the Middle East, we've got the Ukraine, we're closer to the nuclear war than we've ever been since the 60s. I mean, how do you see this playing into, we were talking about the gold price. Gold can be hugely affected by how much currency is created to fund war. So,
in my experience, the immediate impact of a variety of fears can impact the precious metals price. Looking at history, the most important variable is the one that you track, which is to say the fear that savers and investors have about the maintenance of their purchasing power in fiat currencies. In the very near term, I think what happens, I think I've observed this over 50 years being involved with investors, is that as investors begin to feel the fear associated with the deterioration of their purchasing power, they use any psychological excuse to express that fear. And so war, or the threat of war, becomes the excuse to exercise a strategy that they were already considering as a consequence of financial fears. Now, the second part of your statement is very profound. The want of societies around the world to exercise their political will, given the unwillingness of their own citizens to pay for it, means that they have to borrow or they have to print to wage these wars. Printing new specious currency units without doing anything to increase the underlying value of the economy always undermines the value of the existing currency units. If you have, let's say, 1 trillion currency units, call it what you want. Let's call them Mikes just for fun. And Mike decides that he's going to print 200 billion more Mikes to keep the trillion already in existence company without doing anything to increase Mike's net worth or his income or the utility he generates. What he's done is basically devalued the existing stock by the amount that he's added. And there's no particular difference between a Mike and a dollar. They're both specious currency units. The difference, I guess, is that the dollar has an army and a navy behind it, and Mike is somewhat more peaceful. But that's the only difference.
Right, and yes, the army and the navy lets basically them just hand out these digits printed on paper. But if you go around with a pad of Post-its and make out IOUs all over the place and put various numbers on them and hand them out, I think the Secret Service will show up at your door, won't they? Isn't it the Secret Service that investigates counterfeiting? And but you're in trouble any way you look at it.
Absolutely, and I challenge any of your listeners to explain to me how quantitative easing isn't counterfeiting, other than who does it. That brings up another topic about scarcity and value. Pablo Picasso used to, on occasion, go to a restaurant, look at the bill, get a piece of paper, and draw a Picasso, a currency. So let's say that the meal was 50 francs. He would draw a 50 Picasso franc thing on a piece of paper and give that to the restaurant owner in lieu of 50 francs. And the understanding that I have is that those counterfeit Picassos are worth an average of 1,000 times what the face value of that was. So in some senses, depending on the provenance of the issuer, you're better off with the counterfeit than you would be with the real.
I guess, that is because it's limited in supply. If it's a real Picasso.
Correct. And he was a better engraver,
Yeah. Okay, so you have another event coming up as well in the future. Tell us about that real quick.
Boy, you're giving me a lot of excuses for commercials today. Thank you very much, Mike. The Rural Natural Resources Investment Symposium takes place July 7th through 11th in Boca Raton. We've been doing this conference for almost 30 years, Mike. I'm embarrassed to say I've been doing it for so long, I forget how long I've been doing it.
Wow.
And I believe that it is the best natural resources investment conference on the planet. 4 days, you can attend online in person in Boca Raton, or online from the comfort of your own home. Why should you do this? Well, first of all, great big picture thinkers. Jim Rickards, Daniela DiMartino Booth, Nomi Prinz, Bill Bonner, Grant Williams. Someday, hopefully, by the way, Mike Maloney, but that's a different story. The people who talk to you about the world the way it really is, not the way that CNBC or ABC or Congress wants you to believe it is. Beyond that, great natural resources analysts, people who've been making money in the sector through good market and bad for 30 years. Beyond that, my favorite feature, the living legends. The living legends are a group of people who have built multi-billion-dollar mining companies from scratch, telling you what they did right, what they did wrong, and how the lessons they learned makes them better investors and can make you a better investor too. And then, of course, there's my exhibitors. At every other investment conference on the planet, exhibitors are advertisers. The qualification to exhibit is a check that cashes. At my conference, if the exhibitors, the public company exhibitors, aren't owned in accounts owned and managed by me, they can't come. No guarantee that every stock I buy goes up, but there's an absolute guarantee they've been vetted because I've written a check. The upshot of all that is that at that conference, whether you attend live or in person, two great features. You have access to the recordings for a year because you're going to need them. We're going to give you more information in 50 hours over 4 days than you can absorb in 50 hours in 4 days. But also, if for any reason whatsoever, whether you attend in person or online, if you don't think the information that we give you is worth the tuition that we charged you, simply email me and you get a gold-plated 100% refund.
Excellent. Sorry, I had my mic muted. It just started pouring here and the background noise went way up. So I think we're going to sign off here. I want to thank you so much for this interview. It was very enlightening.
Well, Mike, I want to thank you for having me back on your show. And I want to thank you, too, for all of the work that you've done on behalf of investors and folks like me for all the years that you've been doing it. We've known each other for a very long time. And from my point of view, at least, it's been both a pleasure and an honor to be on your show.
I think we met about 20 years ago. I've really enjoyed every minute that we've spent together. I want to thank you so much. And we'll sign off now. So thanks, Rick.
Thank you, Mike.